Welcome to the CryptoCannaVerse show. We're an international faith-based show where we help founders within the 4Cs find investors, advisors, and partnerships. The 4Cs are Christ, cryptocurrency, cannabis, and certified public accountants. All faiths are welcome. Hosted by Crystal Wampler and Alan Lau, and today we have a special guest co-host is Gene III, who leads the product division of Levelfield, spearheading the development of consumer-centric solutions encompassing crypto-related cards, loans, trading, and online banking. As a co-founder, he's been instrumental in shaping Levelfield since its inception. With a digital asset background dating back to 2016, his focus lies in pioneering innovative approaches and leveraging crypto as a form of currency and property, revolutionizing its utility in the financial landscape. Welcome, Gene.
Thanks, Crystal. A little bit about Levelfield. We're a few months away from finalizing the acquisition of Burling Bank, which was a FDIC-insured bank in Illinois that banks cannabis-related companies as well as some crypto-related companies, has been doing so for 5 or 6 years. And as you said, we're trying to build a new online platform to let people do Bitcoin-backed loans, cards, trading, and online banking. Thanks for having me.
You're welcome. Where are you calling from today?
Houston, Texas.
Nice. Will this bank be in Houston, Texas, or where will it be?
So we're going to be operating in all 50 states as soon as we go live with the platform. The bank currently runs out of Chicago, and we're going to continue to do the traditional corporate banking out of Chicago, with the consumer and online experience operating out of Houston.
Nice. Will you guys be the first cryptocurrency bank?
The first one that's really facing consumers that are interested in cryptocurrency. Yeah, there are a couple other banks that have done Bitcoin-backed loans that do institutional custody and things like that. But we're really going to be one of the few that are forward-facing. Burling Bank was actually one of the first FDIC-insured banks to issue a Bitcoin-backed loan. So it's not new territory and not new permissions.
That's wonderful. Well, thank you for being our guest co-host today. We appreciate you. We are booked through May 2024. If you would like to be a guest speaker, please reach out to crystal@kinethics.com. Note, we are not a licensed investment advisor, so please don't consider the show's content as investment advice. Conduct your own research and consult a professional investor before making financial decisions. Today's show is being live broadcast across multiple platforms, including Facebook, LinkedIn, Twitter, several Facebook groups, YouTube, and with a reach of over 17,000. Our strategic network includes venture capital firms, family offices, blockchain and crypto hedge funds, business owners, Web3 launchpads, CPAs, attorneys serving ultra-high net worth clientele, investors, and angel investors. Alan, how's it going today?
I'm doing great. Just getting over a little cold, but I'm doing fine. I'm doing great. Thank you, Crystal.
Yeah, it seems like a lot of us are getting over a little cold. You sound great, though. What is our Bible verse for today?
Yeah, so thanks for joining everyone for CryptoCannaVerse. Today's Bible verse comes from Proverbs, a lot of wisdom in Proverbs. 11:25, a generous person will prosper. Whoever refreshes others will be refreshed. I think not only going into the holiday season, but throughout the year round, always giving a generous outlook to prosper others. That's how you can bring wisdom to others. This is a book that I read a few chapters, not every single chapter, but it all talks about, wisdom. How can you prosper from wisdom? How can you be generous? And God will give you wisdom. All we got to do is ask.
Thank you, Alan. Alan, where are you calling in from today?
I'm calling in from Sacramento, California.
And were you born in Sacramento? Were you born in the United States?
No, I was actually born in Hong Kong. I came when I was like 6 years old, in 1987.
Wonderful. Why don't you tell our viewers more about yourself? What happened?
I think just okay. Yeah. share with you a little bit about my background. So I was born in Hong Kong, raised in California, and I studied macroeconomics and communication at University of California, Davis. Then I spent about 16 years at a private bank as a financial advisor. Services I provide for wealth management services are like lending, banking, insurance, and trust and fiduciary services. So I work with a lot of wealth advisors in my career, and most of my experience would be in finance. So I'm so grateful that Josh is here, Jeannie is here, and then everyone that's here to share with us a little bit more about, banking and crypto, because I think that's where the future is, because advisors are right now just learning about the crypto market, understanding it from not only regulation standpoint, but knowing that clients will come in with a crypto portfolio. They need to ensure that they are giving the right advice. So I truly believe in crypto, and thank you for everyone for joining today's call.
Thank you, Alan. The CryptoCannaVerse show presents speaker Joshua Peck, founder of TrueCode Capital, today, Friday, December 22nd, 2023. Joshua Peck is the founder of TrueCode Capital, a cryptocurrency hedge fund designed to provide uncapped growth while seeking to protect investor capital. He is the author of Cryptocurrency Risk Management, a guide for family wealth managers. Joshua is a member of the Denver chapter of Tiger 21 and the creator of the Foundation for Digital Asset Risk, a nonprofit that educates the investment community about the risk of investing in digital assets. He's a frequent guest of the media and has been featured in the Wall Street Journal, CBS MoneyWatch, U.S. World and News Report, and Forbes. Joshua Peck, the founder of TrueCode Capital, is a prominent figure in the crypto industry, has undergone a comprehensive crypto audit and developed an invaluable digital asset recording checklist. Reach out to crystal@kinethics.com to access his insights and expertise, and I will also drop it in today's chat. Welcome, Joshua.
Thanks for having me, Crystal.
So happy you're here today. First I want to congratulate you on your new baby. How is that going?
Really well, really well. He's sleeping better and better every day. So, as a new parent, you don't get a lot of sleep a lot of times, and luckily we've been blessed with children who we're not too colicky.
That's excellent news. So, I'm curious, how did you go down the proverbial crypto rabbit hole?
Yeah, it was kind of interesting for me because I started investing in cryptocurrencies around 2012, 2013, where it really was kind of a little more of an unknown quantity than it is today. Had built a tech company and kind of had some liquidity events from that. Kind of noticed that all the smartest people I knew from my tech career were all going the same way. They were all going towards digital assets, crypto. At that time, especially, it was just practically only Bitcoin. So, and back in those days, it was hard to find people even just to buy Bitcoin from. So I would go, negotiate a deal with somebody online or in a forum or something, and then go send them, $500, get in your car and drive across town and go send them $500 a day worth of, Western Union MoneyGram type of wires, because they wanted to stay under the money service business limits, right? If they were smart, they wanted to. And so, so you do that $500 a day, and, back when Bitcoin was $20 a coin, and, accumulated a small position in Bitcoin. Then, so within about 4 years, that became half of our portfolio, right? And so I don't know if anyone's ever had a portfolio that was half Bitcoin, but it's not, and certainly in 2017, it wasn't very comfortable. On one hand, great, it's wonderful because you've just, doubled your net worth, so your whole tech career and all the businesses you built and everything kind of, could have just bought more Bitcoin, I guess. And on the other hand,
well, that's called an overweighted position, right?
Oh yeah, they got overweighted quick. Yeah. And so on the other hand, I like the growth, right? It's like, okay, do I want to whack this thing back down to 1% when I'm getting such wonderful growth out of it? Or do I want to actually sit down and figure out how to professionalize the management of this new emergent asset class, right? Because if you go to any other investment class, you're going to have, giant prospectus and, disclosures from SEC or and all kinds of stuff like that. That didn't exist for, Bitcoin in 2017. In many ways doesn't exist now unless you're investing like through a fund where they're doing a little more disclosure. And so I think in a lot of cases, it really started with kind of the topic of my book, which was cryptocurrency risk management. Because if we're going to professionalize managing this new emergent asset class, the most important thing we can do is understand what are the risks, right? Because if we can protect our downside, then we can play bigger in the pot, right? Then we can get to larger allocations to the digital asset space. But with, unconstrained downside and unconstrained, not really understanding, having good processes around custody, around, the operational engineering around what you're doing there, you probably are stuck there at that 1 or 2% level for, indefinitely. But spent a fair amount of time doing that, had that kind of worked out by 2019, spun that off into an SPV for us, to ring fence it for tax purposes and operational efficiencies and a number of things like that, some business continuity considerations, and established a track record over a number of years there. And then in 2022, actually spun that out into a separate GPLP partnership, a hedge fund for outside people to invest in. And that's TrueCode Capital, which is what I manage today.
Who did you design TrueCode Capital for?
Primarily for myself, people who had relatively large portfolios compared to what you would conventionally think of in crypto, people who aren't putting a few $1,000s of digital assets on a thumb drive and shoving it in a sock drawer, but are thinking, okay, how are we going to manage hundreds of thousands of dollars, millions of dollars, tens of millions of dollars of digital assets in a way that isn't insane, because, a lot of the answers in the crypto space, kind of rely on loyalty tests, or you have to, guys will get out their pitchforks and torches and, say, oh, well, you should just believe. But I'm like, no, I shouldn't just believe. I should, if I'm going to be a professional asset manager, if I'm going to do this well, I need to have the protections, have the processes in place that protect that capital. That's my responsibility to be a good steward of capital. And, loyalty tests and, true believerism doesn't really come into it for me. And so there's a difference between something that high net worth people can invest in who have created wealth versus someone who's, speculated and trying to create wealth. And this vehicle is really designed for the high net worth people who are wanting to get that crypto allocation up to a point where it makes a material impact on their portfolio, who are thinking, oh, I've got a portfolio, I've got stocks and bonds and real estate and this and that and the other. But hey, this digital asset stuff is kind of neat. If I can kind of tame it a bit, then I can really get some great growth out of it for my portfolio, right? So if you're thinking portfolio and you're thinking, how do I get exposure to this? How do I get exposure to it responsibly? That's really what TrueCode Capital is designed to solve, and primarily for us first, because we wanted to have this professionalized for us.
You touched base on being a good steward. What does it take to be a good steward of other people's capital and your capital?
Yeah, especially in the crypto space, it's challenging, right? I mean, there's problems that we have in crypto and challenges there that we haven't seen in traditional assets since 1929, 1940, because so much of the regulations came into play, and over the past intervening, almost 100 years now, those industries have become very, very mature. Not so in the digital asset space. I know that Gene, going to be a big part of modernizing that. But so we really have to be very defensive with capital. And it all starts with the idea of what are the risks of crypto investing, right? Because if you start with what are the risks of crypto investing and you say, oh my gosh, I can only have 1% of crypto in my portfolio because it's so risky. Well, that may be true if you don't do anything, but if you start actually digging a little deeper and saying, okay, well, what are the risks? Well, there's some counterparty risks. So, maybe if we have to do something about custody, right? That's one of the very first things people really have to work on. And so, am I going to do self-custody? And do I have the technical expertise to do that? Or am I going to do third-party custody? Am I going to do custody with other providers, use third-party custodians? And both of those decisions have impacts on, the types of strategies that you can run. If you're going to be an active trader, you probably can't really do, extreme cold storage types of custody scenarios. And then if you want to be a little more active in the market and you're a little bit more worried about market risk, then you need to keep things on a little hotter wallet. And so as you go through the crypto ecosystem and you start understanding that it's a little different than traditional assets because, first you've got an open source software project at its base layer. Virtually all digital asset projects are an open source software project. And so you have all the risks and threats that go along with that. So all the threats, the software threats, the development team threats, all of that stuff. And then in order for that software to be of any use to anyone, it requires a peer-to-peer network of people to be running that software. Mm-hmm. And so you have all the risks and all the threats that are affiliated with, peer-to-peer networks. We don't know who's running it. Can it be a state-sponsored person? Can it be a terrorist organization? You don't know who that is. And then we actually get to the digital asset. So kind of at the third layer there, you actually get to the digital asset layer where where the people are more familiar with, people are more worried about this. Like, well, is the price up or down today? It's in the headlines and all that stuff. But if you don't manage the rest of the stuff, that's really where the danger in crypto comes in. And so you have to start with, how do I create an ecosystem knowing all of the risks and all of the threats that exist against these types of investments that I can execute? And for us, what we do is we've made the decision, because we're actively trading, we want to manage the market risk. We use a computer algorithm, a momentum-based strategy, which keeps us in the market when the market's going up and gets us out of the market when the market's going down. And then we repeat over time to create a statistical advantage for ourselves and for our clients. Now that's great, but that informs a number of other decisions. So for example, when we work with liquidity providers, that means that we do have to keep coins on exchanges more than other people than you would if you're just a buy and hold investor, right? And so what we always try to do is we try to whittle that window down as little as we can. And so because we are, doing this professionally, we have access to things a lot of individual investors wouldn't have access to: dark pools of liquidity. We can get credit lines with the exchanges, with our OTC providers, so that we can keep the money safely in the banking system until we execute the transaction, and then we settle it after the fact, and then that pushes out. Then on the other side, we're like, okay, well, how do we keep the digital assets off of exchanges as much as we can? Well, we keep those off by using additional third-party custody providers who only do custody. And then, okay, well, that's fine, but what if the custody providers fail? Well, we can manage a little bit of that by working with, top tier US-based SOC 2 compliant, New York DFS registered entities, right? So that drives that risk down a little bit. And so it's kind of by composition, as opposed to any one thing that you do to be a good steward of capital in the digital asset space. And it certainly helps to have been doing it for about a decade and have seen and experienced all of the crazy stuff that goes on in the crypto space. And it seems like it comes out every few years. The same ideas come out every few years and then have the same predictable outcomes. Yeah, and then on the banking side, we're pretty cagey about that as well, especially after Signature Bank and Silicon Valley Bank and all those failed. And we don't even trust banking systems that much anymore, where that we're actually taking cash and pushing that into brokerage accounts and doing money market funds that are invested in short-term treasuries, and we actually get a little yield out of that right now. So that's a good investment for us as well. So really just focused on winnowing that window down where that we can have any cash exposed to cash or digital assets exposed to counterparty failures, to counterparty problems. And if you do that pretty successfully and pretty thoughtfully, you can drive that risk of investing in digital assets down to a place that is more comfortable. You very rarely get rid of risk in crypto space. You kind of play whack-a-mole, and you increase one, decrease another, and then you have to find a little balance there where that you can operate a strategy that actually makes sense for people.
That's great. Do we have any questions, comments from everyone?
I've never been on such a quiet panel before. And I keep thinking, like, your voice is so calming. I think we're all just like zenning out listening to you speak. I'm going to bring it back a little bit to your crypto story. One of my favorite things Crystal does is ask about, like, okay, how did you get into this? Because everyone usually has a really interesting story. And I liked hearing that you followed smart people, which I think also makes you a smart person. But I'm curious, like, what was the feeling knowing, like, okay, this is a risk, but everyone's doing it. Let's see what happens. And then to where it is now, like, how did you feel when from this one small investment just started going up?
I was terrified, because I didn't trust it. I still don't trust it. I'm very much not a true believer. I have no favorite tokens. I have no favorite children. There's none of this is something that I am extremely comfortable with. Bitcoin and Ethereum, I think I can probably get behind maybe doing a buy and hold on at some point, but ultimately I don't even trust cash. It's like, if you're a student of history, it's gone down by 90% since 1971. And if cash isn't safe, what is safe? And so I try to be pretty active in managing things and try to do the best I can to increase my level of knowledge so that I can get comfortable with it, right? And because I have this idea that knowledge and risk are inversely proportional. And so the more that you know, the less risky it actually is. Like, one of my favorite examples is, I have a lot of friends that work in real estate, and they say, "Oh my gosh, you're working in crypto. It's so risky." I said, "Are you kidding me? If I try to build like a multifamily building, I'm gonna get eaten alive." I mean, real estate is not less risky for me. But that's because I spent, the past decade, trying to learn about digital assets and, writing books on the topic and, really studying this in depth.
I gotta oh, go ahead first. Go ahead.
You're on mute, Kurt.
Unmute, Kurt. Go ahead.
You got to unmute yourself, Kurt.
So, silly me. Sorry about that. What is the goal? Like, if you, for the next year and then 2 years, like, where are your, I don't like to use the word challenges, but opportunities. What are you trying to do? And is it an awareness issue? Is it because, I still feel like, I'm not even sure most of the population, or even 25% of the population, they may have heard of the word crypto, but they don't understand it. Certainly investors are starting to get a lot, they're taking baby steps into it. I mean, I was fortunate because I had an economist friend in 2013 that said, "You got to buy Bitcoin." I didn't even know what he was talking about. So, we bought 5 for like $900, but so what is your goal? And what's the challenge? Like, what do you need to do now? Is it an awareness issue that you want to make people more aware of your hedge fund? Where are you most your customers coming from? Like, what's the next thing for you?
Yeah, for us, really all of our clients are higher net worth people, right? This is specifically designed for ultra high net worth individuals, family offices, people like that. In many ways, we're a little bit decoupled from the crypto industry. I'm just an asset manager. What I'm doing really is, hey, this is a great growth opportunity. And if you manage it well, then you can participate in it in ways that aren't insane, frankly. That's what I'm trying to do. I'm not trying to convince anyone that they should buy crypto. I think that your viewpoint there might be a little skewed just because of your demographic, right? If you're in Gen Z, 20% of people only invest in crypto and over 70% of them invest in crypto. If you're in the boom generation, and maybe this is just a time horizon thing too, where maybe you just don't need it, right? Because you don't need that high growth in your portfolio because you've had, the past 50, 60 years has been so high growth that, it's just like people made so much money in real estate and everything, basically everything. You could throw anything at the wall and you'd make money at it, just because the cost of money was declining so much. So, and Pew Research notably did a survey and found that only about 15% of Americans had bought cryptocurrencies, right, at the end of 21, which was pretty much high of the market. So we wouldn't imagine that number to be too much higher now. So from my perspective, we're participating in the natural growth of digital asset space. I'm not necessarily trying to grow it or trying to encourage people to invest in it as much as I'm trying to create an option for people who have a specific set of problems, right? They have the high net worth problems, the high net worth challenges for investing in digital assets. And we give them a vehicle that's sober and safe to invest in. And so, yeah, and I mean, we're raising capital. Obviously, every fund always is. And we are looking for investors. But, not really trying to convince people that they should be investing in crypto broadly, but hey, here's a better card, a better vehicle to help you get there, as opposed to doing it yourself because of things like we saw in 2022, the FTX, Celsius, Terra Luna failed, Three Arrows Capital. I was around when Mt. Gox failed. BitConnect. You go back through the annals of history are littered with bad ideas in the crypto space that come back around every few years. And we provide a vehicle that allows people to sidestep a little bit of that. That's the game that we play.
What is your minimum investment?
$100,000.
And I'm kind of curious, what's moving the market at the moment? Can you tell me a little bit about that?
Yeah, right now it's really two things that look like that we waited for kind of a long time, but look like they actually might hit kind of in a fairly short period of time, where they might actually kind of align to be kind of a double tailwind here. First and foremost, the digital asset market broadly is driven. The catalyst for the big moves that we see is the Bitcoin halving event. And so the Bitcoin halving event is when the crypto miners who solve the problems that make the Bitcoin network work, their reward for doing so drops by half. And that usually spurs on, because there's the faucet of new Bitcoin gets cut by half. You can kind of liken that to like if the Saudi Arabia cuts pumping of oil. There's a certain amount of upward price pressure if they cut oil pumping. And some of that's rational, as opposed to most people who say, oh, it's a Ponzi scheme, or it's a mania, it's all tulip bubble mania. Well, there's a certain amount of that's structurally supported, right? Where that, okay, there's less new supply. And so we're going to expect that price would rise a bit. right? And that makes sense. And then but that's usually the catalyst, and then it turns into a mania because everybody's making money, and like people can't help themselves because people are people. And our job is to just kind of navigate that markup. And then so with the Bitcoin halving event, then that's due in April of 2024. And then there's a second event, which is really interesting too, which is the emergence of the Bitcoin spot ETFs.
Mm.
And Bitcoin spot ETFs are important because they will require the largest institutions in the world to buy a lot of Bitcoin, right? Like I had a call the other day from a guy who's representing some institutional buyers, and they want to know how to buy $1 trillion worth of Bitcoin. Well, there isn't $1 trillion worth. They would own all of it,
Or Bitcoin.
right? But they're still kind of, I mean, you can tell they're kind of struggling with this, like, and like, how much discount would I get? Right, is what they're asking me. And I'm like, I mean, if you get in for less than a 500% premium, someone's done their job very well. So, and so that's kind of the scale that we're dealing with, because we have, basically $100 trillion of outside capital, outside investment that may gain access to this $1 trillion market roughly about the same time that we have this natural catalyst from the Bitcoin halving event. And so those are the kind of two things that we're watching. So we're kind of on halving watch and we're on ETF watch. And if those two, we know that the Bitcoin halving is going to come to fruition, but if the ETF comes to fruition kind of in around the same time frame, let's say that there's a Bitcoin ETF that gets approved in, January, February, March, maybe, and then the Bitcoin halving occurs in April, all of a sudden it gets the market gets really, really interesting to the upside for those that have been watching the space for a long time.
Do you think the Bitcoin ETF will affect your business negatively?
I kind of doubt it. We're really in the business of protecting capital. A lot of the protections that we put in place operationally, they'll put in place, which, fine. But a lot of the trading, the active management that we do, that won't be available there. And for people that are excited about the ETF product, I think you have to be a little bit careful, because there's a mismatch in parity there in terms of the liquidity of that market. So while we expect it to be highly liquid, it's very much highly liquid while it's open, right? And it's going to be open from 8 until 4:30 Monday through Friday. Meanwhile, Bitcoin, the spot market, the native token market, which is what we trade in, is open 24/7. And if you've been around the space at all for much time at all, that market can move a lot overnight, and it can move by 20-30% over a weekend.
Wow.
And during that time period, you can't get out of those positions. Yeah, it's just going to, on your chart, like in your brokerage balance, it's going to be like a gap down of 20-30% on that position. And that's just what you're going to see. And that's how it's going to open. And then we're anticipating that the market will have circuit breakers as well. So that will stop trading of that ETF product. Meanwhile, people who are dealing in native tokens will be able to continue to trade and get in and out of markets, or do our work, what we need to do. So I'm not really too worried that affects our business. For people who are selling like buy and hold products and things like that, it probably is more impactful for them.
Yeah. So you at TrueCode Capital, you guys are managing risk, you mentioned, right? So when we were asset managers as advisors, and we were managing portfolios, one of the models that we implied would be an efficient frontier model. It really gives you the risk and reward, standard deviation. Obviously, we're in the crypto market. There's probably not a whole lot of large caps, a whole lot of mid caps, small caps you can build a portfolio. How are you guys measuring the risk? You guys use, Efficient Frontier has been around for a long time, and I think you can apply for many investments that are out there. Are you guys using that model to gauge your standard deviation and how you manage risk?
We measure standard deviation, but we don't really use that as a core benchmark for ourselves, right? Our standard deviation is much lower than Bitcoin. But we look at beta, which is our beta is about a third of Bitcoin, even though we have similar returns. And we look at maximum drawdown because I look at that very much focused on that's the pain that people feel that's causing them to make irrational decisions with their investments. No one cares or knows what their efficient frontier is. They don't know what their standard deviation of the portfolio, the monthly calculation for standard deviation based upon the daily standard deviation of their portfolio. No one knows this. No one cares. They care. Like I used to have $1 million and now I have $200,000, right? That's an experience that people have in the digital asset space that is very uncomfortable. And that's when people sell and make irrational decisions. Like you, I don't think that there's a universe of tokens in the digital asset space that is good enough. I think what we're really seeing are more like more like software effects, more akin to like there aren't 12 great search engines, right? That are all equally great. It's like, oh, well, there's one technology won and it became Google, right? And so for a cryptocurrency, that's Bitcoin. For a smart contract platform, that's been Ethereum. And then, it looks like probably Avalanche is going to win for gaming tokens. And so we're kind of seeing those play out. And so for each use case of Bitcoin or of cryptocurrencies or of digital assets, we're seeing, kind of these winner take all games where that for each one of those, it's like that. And so our risk model is really focused on how do we give great returns. And again, because we're actively trading, we're focused on driving that downside down and then keeping the upside up as much as we can.
And here's the next comment for, I think, Gene. Congratulations for acquiring the Illinois bank, FDIC insured bank, because I think that would open up conversations about crypto because you guys are already involved in crypto, and it probably tied into Josh. Like Gene, like when you're, planning.
Alan, sorry to interrupt, but
Oh,
just to correct you, they are still working on acquiring the bank.
Sorry. Okay.
Yeah, so we're about 11 months in. We're a few months away from the finish line, but
Okay, a few months away. Okay. Well, I think that's where Josh and you guys can talk to each other.
Absolutely. When you were talking about different liquidity providers getting lines of credit and trying to find different custodians, I definitely related to that. As we figured out our own solution to help high net worth clients and our OTC desk. It'll be interesting because industry is still evolving. I've got a pretty good idea of where the puck's going for custody, and they're going to start hopefully pressuring and enforcing the qualified custodian rule, which would essentially bring the business to OCC chartered trust companies and FDIC insured banks. I'm not sure how that will actually impact the settlement, but at least we'll know that there will be large levels of oversight over custody in the future. So I think we got a couple of years of having to figure out our own solutions of how to do things properly until we actually have these sophisticated solutions for all-in-one settlement and custody.
Any more questions, comments? Jeff?
No, I was just going to say that's where the opportunity is. The opportunity is in the complexity. Because of the complexity of the space, there's great opportunity for those that can dive in early, learn it, figure out these, complex solutions to custody, to securing, to storing, to purchasing, to extracting value out of this great space. And then, the infrastructure is being laid and built now that'll come in. And the difference between pricing today and pricing when things are more certain is quite a bit of alpha. And I commend everybody on here for being early and hopefully enjoying the alpha that's coming.
Thank you. Thank you. Jeff, why don't you introduce yourself?
Oh, sure. Jeff Embry. I'm a managing partner of CB Capital, a long-only liquid token crypto hedge fund. We launched in July of 2022 on the premise that a major equity bear market and crypto bear market was in the midst, not knowing, as always, exactly where the bottom was, but that if we got in at or near a bottom and early, rather be early than late to a new bull market cycle, things, 60, 70% of the solution would be fixed or would be set there, and then just good decisions after that. So like Joshua was saying, the challenge is and what keeps you up at night is the risk in the space, the risk of securing, storing, holding value on the projects you choose. And that's why we like being long only and getting rid of the excess risk of, no shorting, no collateral, no day trading, and finding great projects that we believe will implement the next iteration of this great space we call Web3.
I hear you have a recent partnership. Can you tell us a little bit about your IRA partnership?
Oh, yeah, fantastic. We have a couple new partnerships, actually. One's with a great staking company, and happy to tell you about that. They're, bare metal, globally diversified SOC 2, fantastic. We couldn't be happier. And then our most recent partnership with an IRA company that facilitates investors to invest their beneficial IRAs, inherited, traditional rollover IRAs, Roth IRAs, SEP IRAs. And now those folks have access to, a crypto hedge fund partnership with those tax deferred monies. Everything stays like titled, tax deferred gains. And we couldn't be more pleased to have finally introduced that. It's a game changer for both us and most of our limited partners that have heavy or heavyweight tax deferred monies.
Wonderful. Thank you for elaborating on that. That's exciting news. Brian Smith, how are you doing today?
I'm doing very well. Thank you, Crystal.
It's nice to have you here. Why don't you take a minute to introduce yourself and tell everyone what you do?
Well, Brian Smith, and I'm with the Due Diligence Project, and we work with CPAs all across the country, bringing them the best and high value, peer-reviewed, sophisticated tax strategies. And I just kind of seen you're promoting this event on LinkedIn, and I've been very curious about crypto. I'm afraid I have zero to offer to everybody here in terms of knowledge, but I'm really loving what I'm hearing and what I'm learning. So thanks for allowing me to join the group.
You're wonderful. Are you guys now up at like 700 CPAs plus that are in your network?
It's hard to keep track of the number, but you're in the ballpark.
That's wonderful. And you are calling from San Diego, correct?
That's correct. Beautiful San Diego, where it is raining right now.
That's surprising. Mr. Tom Brady, thank you for coming, Brian. How are you doing today?
Can you hear me? I'm doing well.
Wonderful. Why don't you introduce yourself and tell us what you're doing?
Thanks. It's an honor to be here, Crystal. I'm head of business development for a cancer therapeutics company, not in the crypto space, but we are, you might describe us as the 50 to 100 to 1 long shot kind of investments in a space that you have to consider with the FDA, and you have to work with the patent office. And fortunately, our CEO has a great deal of experience in those matters. Already took a company public once. We're the first company ever to be awarded a breast cancer therapeutic agreement in the Kingdom of Saudi Arabia. I first arrived there in May 2022. And by May 11th of 2023, we had 2 signed agreements with King Faisal Hospital. It's an 1,100 bed hospital, premier cancer facility in the Middle East. And we're operating inside the highest level of medicine and the healthcare system in Saudi Arabia right now between Riyadh and Jeddah. And we opened our office right next door to Roche near the Diplomatic Quarter this summer. So I'm here to learn, and I very much appreciate the invitation, Crystal. Thank you so much.
You are most welcome. I also want to congratulate you on closing what were your $23 million grant?
We closed 23 million in Series A, and we recently submitted 20 million in non-dilutive grants to the Saudi government. Yes, in September. So we're just waiting for them to open the envelopes in January. We'll see.
That's wonderful. Congratulations. Do you have any other current partnerships on the horizon?
We work with the head of breast cancer research at the Cleveland Clinic. I'm also involved in developing a very valuable relationship with the Mayo Clinic. We just launched an education series there. I did grand rounds this December in Phoenix at the Phoenix satellite office, and that's for colorectal cancers, which share very similar protein targets as the breast cancer work that we've done. And there's a lot on our website at flowpharma.com if there's any interest. And I very much appreciate that warm introduction, Crystal. Thanks.
You're most welcome. Thank you, Tom, for being here. Amanda, good morning. Afternoon, actually. Why don't you go ahead and introduce yourself?
Oh, hello, everybody. There's so many new faces here. How exciting is this? It's nice to meet everybody. I'm Amanda. I'm actually here for two things, but I'm going to talk about the Happy Camper Foundation, which is a nonprofit that me and my husband run. And just recently, we sent 15 preteens up to camp for free. So these were inner city kids who had not gone camping before. And usually we send children, but I want to share this because it's so different, sharing and sending teens up, because they actually can feel the appreciation and support from their community. And that was just one of the best experiences I had, to actually be able to hear these kids verbally just be so excited to be up there. And to be able to send them for free was awesome, which is always our goal, is not just to send partially, but have them be able to go up and not have any stress on the parents. This was a counseling camp. So these kids from LA are part of a camp where they connect with older kids and get counseled. So to be able to spend more time with them, away from their parents, away from the city, was really amazing. So yeah, we're just a little nonprofit, and I'm also here as Haro CPA. I work in a CPA firm, which most of you guys know what we do. We're just a bunch of nerds counting money and trying to save you some.
Save you some.
That's wonderful, Amanda. Why don't you drop your Happy Camp information in the chat?
Sure, absolutely.
Thank you so much for being here. Jean, I know you kind of introduced yourself a little bit, but we have some new players on board. Why don't you just take a minute to introduce yourself?
Sure. So I'm head of products here at Levelfield. I'm trying to build some interesting card and loan products for around Bitcoin and crypto. We're going to be one of the very first FDIC insured banks offering services to people interested in cryptocurrency. So on the consumer side, trading, online banking, cards and loans. On the commercial side, corporate accounts, being able to handle custody, settlement at a later date, and some interesting things involving soft leverage. So Bitcoin-backed loans, and So actually, that was kind of a question I had for Joshua. Are you guys doing any shorting or any leverage, whether it's margin trading or Bitcoin backed loans?
No, we don't do that. We're long only, no derivatives, no leverage. We don't need to do too much to amplify the volatility of Bitcoin because there's enough there for us to work with.
That makes sense. Handling collateral is another point of counterparty, and hopefully one that I'll be able to solve.
Yeah, we're looking forward to it.
You're giving the bank clients peace of mind, Josh. You don't add any derivatives. That's what you want to hear, Gene.
Jeff, did you have any comments down there?
No, it's same thing. We don't collateralize. We don't do derivatives, even though my chief investment officer spent 8 years on the Pacific Stock Exchange, what I call throwing elbows and throwing hands in the internet heyday. We avoid it. Just as Joshua said, there's enough volatility, enough risk in the space, and plenty of alpha that we just don't need to take any more risk on to get it. We'll accept what's there and enjoy this next bull market cycle.
That's wonderful. I know that Joshua is also looking for an anchor investor. Joshua, what would be your perfect anchor investor? What would that look like?
Really for us, it's people that we can actually help, right? People who are thinking portfolio first, who are thinking, okay, well, we've got say a large family office and we want to go get to a 5 or 10%, 20% of a portfolio that is in digital assets in a way that's not crazy. So usually it's, for us, people are really focused on a lot of the risk protections that we do, a lot of the custody protections, a lot of those types of things. And then, of course, we love people who know other sources of capital. So
what is the limit of your hedge fund?
We can absorb about $100 million. Right now we're at about 8. And
About
a
8
large
million?
fraction of that's mine. So
Well, that's actually good. My next question was, how much of your own money have you put in? A very large amount.
yeah, I put about 5 or 6 of that in. So it's
Nice.
it again, it was really designed to help us manage our allocation first, and then as a profit-bearing endeavor second. And in many ways, it's kind of a mission project or a passion project to provide something that is safer for higher net worth people to put money into. I've had so many conversations with people, and okay, well, we just lost 7 figures in FTX. How do I explain that to my wife? Right? Like, my gosh, how did you have 7 figures in the Bahamas? How did you not know not to do that? How did you not know not to do that? And, and if we can be part of that answer for how we make crypto responsible and a strategic investment asset class, as opposed to, the YouTube kind of crazy Ponzi, TikTok-y type of, mania stuff, that's what we're trying to do.
So I know that you were recently audited. Can you give us a little bit of background on that?
Oh yeah, that was a wild period of time. So I don't know if you guys read about this. Like, did you see in the Wall Street Journal, they actually covered at some point where these IRS agents were doing these unannounced visits to people's homes?
Wow.
Well, we were the recipient of one of those. They just showed up on the doorstep one day and said, "We have a meeting for now." And my, 30-week pregnant wife at that time answered the door, and they said, "We have a meeting for now, and you need to go get all your tax documents." And she correctly said, "I don't know you. That looks fake to me. Get out of here." And called me, and then, I kind of sat down and talked to him about it a little bit. And yeah, the process of auditing with the IRS, because I've been through it and I know what they're going to ask for. I think Crystal maybe has a link, because we made a checklist at our firm to help people figure out what to record keep.
I just dropped that link.
Just from my experience, this certainly isn't financial advice. You may need to keep other documents as well. But it was shocking to me that they would request 4 pages of documents and want them in 3 days. Right. And then they would come around and and then you say, okay, well, because I immediately, got my lawyer, CPA, everybody, called everybody, and, put up a rigorous, defense team there to, make sure that we did what we were supposed to do. And they're, interfacing with them. But the but the agents would just like not reply. So he's like, a very normal thing is like, okay, can we get an extension of time for this experience, you know, to go gather these documents? You just send us like 4 pages of documents from like 3 or 4 years ago. We've got to go kind of round some of that up and get it printed for you and shipped over. And, you know, they just not reply. And then just be like, okay, well, if you don't get that to us by the deadline, then you were just going to subpoena you. And it's like very, very aggressive. And then you look at the documents they're requesting, it's actually kind of insane. Like, it's very McCarthy-esque. It's like, okay, give me the names and addresses of everyone you transacted cryptocurrency transactions with ever. Right?
Mm.
And like, if you're sitting there doing like a DeFi contract and, you know, you got 400 counterparties to the thing or something, or DAO or something, there's no possible way that you could comply. I mean, these things are definitely set up in ways that no one could possibly comply. Happily, I have been treating crypto as an asset, as an investable asset for many, many years. I never really bought into the case of using it as a currency. I just really see it as a growth asset in your portfolio. And so all of our counterparties were like, you know, Coinbase or, you know, whoever. So that was relatively easy for us to comply with. But if you're doing more exotic stuff, and you can look at some of the questions that they're asking on that sheet there. And if you're doing more exotic stuff, your record keeping burden is going to be tremendous. And I assume that everyone who ever had to tick the box that says I own cryptocurrency on their tax return, you know, under penalty of perjury, is going to get audited at some point. We just saw yesterday Circle is releasing all of their client trading records going back to 2016. And so they're going to get your names and addresses. And if you're not compliant, if you haven't been reporting that stuff, you know, go get the checklist that we put together, and you really need to get serious about getting your documents in order. And hopefully you have them, because a lot of the firms that, if you've been doing this very long, that they're not in business anymore, where you're going to get the documents from, you know? And so hopefully everybody's been keeping good records.
Yeah, that's great advice. I dropped the cryptocurrency risk management guide for wealth managers, your book, inside the chat, and also the checklist of record keeping suggestions to help survive an audit into the chat. I recommend everyone, you know, checking that out. We have about 3 minutes left. So let's just take, Matthew, can you take about 30 seconds, 60 seconds, introduce yourself quickly, please?
Yeah, of course. Thank you so much, Chris. I really appreciate it. Yeah, my name is Matthew Papineau. I've been in the crypto space since 2017 and full-time over the past year, specializing in business development and brand development. I'm currently doing a lot of fundraising right now, focusing specifically into RWA, fractionalized real estate, and also raising for a venture capital fund called Protocol. It was the first fund of funds for crypto in Silicon Valley. At the top of last cycle, it was worth 350 mil. We're currently doing a raise for a portion of the fund for 5 mil. This is more of a fund for people that have a lot of risk tolerance. So it follows the cycle. So it's all about liquid in, liquid out, seed raise, getting in on early stage investments. So Protocol got in on early stage investments for Ethereum, Solana, Layer 0, Polkadot, Avalanche, and did a 58x on Phantom. So for people that are interested in getting involved in something that has more risk, there's third-party financials, pitch decks, everything that I can provide. So yeah, I'm mostly focusing on fundraising right now and building a couple different organizations. And yeah, so anybody that's ever interested in any of those things and wants to try to make a lot of money in the next year and a half or 2 years, please reach out. I'd love to provide some decks and some financials as well too. But yeah, thank you so much, Crystal. I really appreciate it.
You're welcome. Thank you, Matthew, for joining us. Kurt, 30 seconds.
30 seconds.
60 seconds max. Yeah, we got to hop off here quick.
Hi, I'm Kurt Shoreham from Philadelphia. I own D4 Creative, an advertising branding firm. And we've been in business for a couple decades, from very huge companies like Comcast to startups like Cognition.ai, which you guys should check out. But I've been investing in mildly in crypto since 2013, I think. But I'm really here as a marketing guy, and I'm listening to what everybody's doing. And my first half of my life, I was in the music industry, and I produced records. You can see a couple behind me, and I still do music all the time. And that's my antenna for the culture. So I always use that as the magic bullet that D4 does in order to help brands, get out to consumers, whether it's B2B or B2C. It's a great antenna to have because music is the universal language, and it really drives emotions. And after all, who do we do business with? We do business with people we like and people we trust.
Yeah.
So that's it.
Thank you. Thank you, Kurt. We appreciate you for calling in. Everyone, I appreciate you. Joshua, thank you for being here as our guest speaker. Grant, thank you for being here as our guest co-host. If you would like to reach out to Joshua Peck, he is on LinkedIn, or you can check out his website at www.truecodecapital.com. Thank you, everyone. Have a wonderful Christmas vacation.